Right now, as you watch this video, a fund you have probably never thought about owns a tiny slice of almost every major company on the planet. Apple, Microsoft, Amazon, Tesla, Toyota, Samsung, Nestle, LVMH, the London Stock Exchange, the New York Stock Exchange. Doesn't matter where the company is, doesn't matter what industry. If it's publicly listed, there is a good chance Norway owns a piece of it. Not a hedge fund, not a bank, not a tech billionaire, a country with just 5.4 million people. Norway's government pension fund global, or what most people just call the oil fund, is worth over $2.2 trillion. That's not a typo. $2.2 trillion. To put that in perspective, that's more than the entire GDP of Italy. It's bigger than the economy of Canada, and it belongs to a country the size of a mid-sized American state. So how did this happen? How does a country of 5 million people end up owning a slice of the entire world? And what does that actually mean for global markets, for Norway, and maybe even for you? That's what we are getting into today. Buckle up. To understand the fund, you have to go back to 1969. That year, oil workers drilling off Norway's coast struck something enormous, the Ekofisk oil field, one of the biggest oil deposits ever found in the North Sea. Norway suddenly had a problem most countries dream of: too much money. Oil money was flooding into the country, and the government had to decide what to do with it. They could have done what a lot of oil-rich countries did: build mega cities, fund the military, hand out cash to citizens, let politicians spend it. Instead, Norway did something almost no other government in history has had the discipline to do. They saved it carefully, systematically, for generations that didn't even exist yet. In 1990, the Norwegian parliament passed a law creating the Government Petroleum Fund. The idea was simple but radical. Norway's oil revenues would be invested outside the country, and only the returns, not the principal, could be spent each year. The first actual deposit into the fund, it didn't happen until 1996, and it was a modest 2 billion Norwegian krona, about $300 million at the time. That was the accord. Today, it's one of the largest trees in the financial forest. So how does the fund actually operate? Let's break it down simply. Step 1. Oil revenues pour in. Every time Norway pumps oil from the North Sea, the profits go to the government. Taxes, dividends from Equinor, Norway's state oil company, and licensing fees all flow in. Step 2. The money gets locked away. That money doesn't go into Norway's regular budget. It gets transferred directly to the fund. Politicians cannot touch it for day-to-day spending. Step 3. Norges Bank Investment Management invests it. The fund is managed by a small elite team inside Norway's central bank, NBIM as they're called. Around 600 employees managing over $2 trillion. For comparison, Goldman Sachs has over 45,000 employees. Step 4. The money goes everywhere. NBIM invests across 3 asset classes, about 70% in stocks, about 28% in bonds, and a small slice in real estate. These stocks span 70 countries and over 9,000 companies. Step 5. Only the returns come home. Norway's parliament has set a spending rule. Only 3% of the fund's value can be used each year. The rest stays invested. This means the fund keeps growing year after year. The logic is beautiful in its simplicity. Oil is finite. You dig it up, you sell it, it's gone. But if you turn that finite resource into a permanent, diversified financial asset, you can live off it forever. Here's where things get truly wild. The fund is so large that even when it spreads itself across thousands of companies, it ends up owning meaningful stakes everywhere. On average, Norway owns about 1.5% of every listed company in Europe. In the US, it's around 1%. Globally, the average is just under 1.5%. Now, 1% might not sound like much, but think about what that actually means at scale. Norway owns roughly $140 billion worth of US stocks alone. That makes makes it one of the largest foreign investors on the New York Stock Exchange. It owns over $15 billion in Apple, more than $10 billion in Microsoft, billions in Tesla, Google, Amazon, and virtually every name you know from the S&P 500. In Europe, the numbers are even more striking. Norway owns about 2 to 3% of many major European companies, some of the largest UK firms, German industrials, French luxury brands. Norway is sitting quietly on their shareholder lists. And real estate, the fund owns prime properties in London's West End, on Fifth Avenue in New York, in Paris, in Tokyo, quietly, methodically building a global portfolio that most people have never heard of. The fund even owns a share of the Eiffel Tower's surrounding real estate. Let that sink in. Here's something that sets Norway's fund apart from virtually every other massive pool of capital on the planet. It has a conscience, or at least it tries to. The fund has a formal ethics council. They can and do blacklist companies that violate the fund's ethical guidelines. Companies involved in cluster bombs or nuclear weapons, blacklisted. Companies with severe environmental damage, blacklisted. Businesses using child labor or committing serious human rights abuses, blacklisted. Since 2004, the fund has excluded over 170 companies from its portfolio for ethical reasons. It sold its tobacco holdings entirely. It's divested from several coal companies. This is a $1 trillion fund using its financial weight to push back on bad corporate behavior. When Norway's Ethics Council speaks, boardrooms in London, New York, and Tokyo pay attention. The fund has also become a major force in corporate governance. It votes at thousands of shareholder meetings every year, advocating for board diversity, executive pay limits, and environmental disclosures. It's one of the biggest responsible investors in the world, not because it's idealistic, but because it has the scale to actually change things. Let's talk about the elephant in the room, or rather, the oil rig. Norway built this massive ethically conscious fund off the back of fossil fuels. The same oil that's been driving climate change, the same energy industry that the fund sometimes divests from. Norway is simultaneously one of the world's biggest oil producers and one of its biggest investors in renewable energy companies through the same fund. The country has the highest rate of electric vehicle adoption in the world. Oslo is one of the greenest cities on earth, and yet Norway keeps pumping oil, and that oil keeps funding the world's most admired wealth fund. Critics call it hypocrisy. Norwegians call it pragmatism. The debate is real and it's not going away. In recent years, there's been serious political pressure within Norway to stop expanding oil exploration. The younger generation in particular is wrestling with what it means to be heirs to an oil fortune in a world dealing with climate change. It's the ultimate modern moral dilemma. When dirty money is being used to build something genuinely good, schools, hospitals, pensions, global investment, when exactly do you stop? Here's a question most people never think about. What happens when one single investor owns 1% of everything? It matters more than you'd think. When a fund this size moves, when it rebalances, changes its allocation, or makes a major buy or sell decision, it can move markets. NBIM knows this. They are famously careful, methodical, and transparent. They publish everything, annual reports, voting records, ethical exclusions, all public. Partly because it's Norwegian law, partly because they understand that a fund this powerful has to be accountable. In 2022 and 2023, rising interest rates and market volatility meant the fund lost hundreds of billions in value in a single year. Those are real losses measured in hundreds of billions. But the fund didn't panic, didn't sell, didn't restructure. It stayed the course because that's the whole point. This fund isn't designed for short-term returns. It's designed to exist in 100 years. This kind of patient, long-term ownership is actually stabilizing for markets. When short-term traders are selling in panic, Norway keeps holding. That matters. Norway isn't the only country with a sovereign wealth fund. The UAE has one, Singapore has GIC, Saudi Arabia has the PIF, China has multiple. But Norway's is different in a few crucial ways. It's the most transparent, it's the most regulated, it has the strongest ethical framework, and crucially, it was built on a clear philosophical principle from day one. This money belongs to future Norwegians, not present politicians. No prime minister can raid it. No parliamentary majority can spend it on vanity projects. The rules are locked in. The discipline is baked into the structure itself. That's the real lesson. Not the investment strategy, not the returns, the governance. The world is full of resource-rich countries that squandered their windfalls. Venezuela, Nigeria, Libya, Angola, countries where all money was extracted, corrupted, and concentrated in the hands of a few, leaving nothing for the population. Norway shows it doesn't have to be that way. With the right institutions, the right rules, and the political will to be patient, a windfall can become a permanent endowment. Norway's oil production is expected to decline over the coming decades. The North Sea isn't infinite. At some point, the spigot turns off. By that point, the hope is that the fund will be so large, generating enough returns on its own that it won't matter. The endowment will have taken on a life beyond the resource that created it. Right now, the fund earns more each year in returns than Norway's oil revenues contribute. The machine is already self-sustaining. Every Norwegian child born today is already, in a sense, a millionaire. Their share of the fund amounts to roughly $350,000 per person, every man, woman, and child in the country. The fund will keep voting at shareholder meetings, keep pushing for climate disclosures, keep excluding companies that cross its ethical lines, keep quietly accumulating a tiny slice of everything everywhere. And most people will never notice. That's almost the point. The best financial machines don't make headlines. They just work decade after decade, compounding quietly while the world rushes past. So the next time you buy an iPhone or sip a Starbucks coffee or drive past a real estate development in Manhattan, there's a small but real chance that a portion of that value flows in some tiny way through Norway's fund. 5 million people, one fund, 1% of the world. What Norway figured out, and what most governments never have, is that money that's saved is more powerful than money that's spent. That patience compounds. That discipline built into institutions outlives any individual leader or any single election cycle. The oil fund isn't just a financial vehicle, it's a bet on the future, a very, very large bet placed by one of the smallest countries on earth. If you found this fascinating, share it with someone who thinks investing is only for Wall Street. Subscribe for more stories about the financial forces quietly shaping our world. And if you want to go deeper, Norway publishes every single detail of the fund publicly. You can literally look up exactly what they own, what they are buying, and why they have excluded companies. The link is in the description. Thanks for watching, mate, and a bundle of thanks for hitting the subscribe button. Bye.